Welcome to RANsquawk's evening morning briefing for Thursday the 29th of October 2009. Just gone through now 10:30 in London, so we'll take firstly a review of the overnight press, starting off with the US, a couple of things that happened in the late Wall Street session yesterday. Obviously, did see those new home sales report disappoint, and that did put equities on the back foot, which continued into the close on Wall Street yesterday. We did also see some continued concerns surrounding the financials as well in the US, and at the close we were down just over 1% in the Dow, near 2% for the S&P 500. Did feed through as well into the Nikkei for the Japanese equity markets, where the Nikkei did fall on its close back beneath 10,000 for a loss of 1.8%. A couple of comments though, again, just worth noting, did come out and may get more reaction in terms of the US Open today rather than yesterday. The New York Fed advisor coming out, according to sources, saying there's a good chance the FOMC could change their rate language next week. The New York Fed advisor, that was Michael Woodford, who has no official role on the decision making in the FOMC, again just an advisor. But again, more press reports now following the Wall Street Journal we saw about a week ago, saying that the FOMC may well be stepping away from their current language in which they've had in place since March of keeping rates exceptionally low for an extended period. Elsewhere as well, another thing that's of close debate at the moment in the political front for the US politicians is US home buyers tax credit. According to sources, tax credits in the US to be extended through April 2010 under a new deal reached by key senators. So that could again provide somewhat of a buoyant sentiment to the US home builders, at least in the equity markets later today for the US. Elsewhere, some commentary coming out of the UK markets of note. Obviously next week is a very important interest rate decision. Rates not really an issue here, more so it's the QE program. Obviously we're coming to the top of the ceiling on the current 175 billion of asset purchases by the BOE. And according to a poll of 62 city economists, it showed that 2/3 now expect the MPC to vote to extend that current program. Analysts were split over whether the limit will be raised either by 25 or 50 billion, with the vote being tipped in favour of a 25 billion increase next week. Of note as well, overnight did see some weakening in the Kiwi dollar, although that has pared those losses and is trading higher at the moment. Overnight we did see Reserve Bank of New Zealand, they kept interest rates on hold as expected at 2.5%. The comments though were slightly more dovish than the market was expecting. Bullard, the governor, expects to keep key rates unchanged until the second half of 2010. Adding that there is no urgency to begin raising rates. Obviously, that dovish opinion coming given the fact that the Reserve Bank of Australia have been one of the most hawkish central banks and one of the first to raise interest rates globally. Elsewhere, in terms of some other things we have seen this morning of note in terms of specific headlines coming out of the rating agencies, we've seen some widening in terms of the Greek and Portuguese against the German Bund spread after comments that Moody's places Greece ratings on review for a possible downgrade, and Moody's also changed the outlook on Portugal's AA2 rating to a negative from previous stable. Elsewhere as well, from the Russian central bank, they had an unscheduled interest rate announcement today. They cut rates by 50 basis points to 9.5% from previous 10. Not too unsurprising given some of the most recent rhetoric from their deputy chief, who spoke last week and earlier this week saying that they could well cut further given their inflation concerns, and also some deterioration in the banking sector in Russia. Elsewhere, just taking a look in terms of corporate news, it's been pretty heavy in terms of quarterly earnings out of UK and European stocks. Starting off with the FTSE 100, saw Royal Dutch Shell have a Q3 profit ex items of 2.62 billion. Slightly above the expected 2.5, but a dramatic increase, or decrease I should say, from their previous a year ago. Q3 dividend was announced at 42 cents, which was up 5%, and outlook remains uncertain though. According to Shell, their shares are seen slightly lower. Lloyds Banking Group as well, they've been covered in most of the major newspapers. They're to get the go-ahead by Chancellor Darling to test the plan for a £25 billion refinancing, signalling that the government is willing to release the bank from its toxic asset insurance plan. Lloyds have been trading a little bit high on the back of that announcement. And elsewhere, National Express, non-FTSE company, but a big move this morning. They'd fall around 15% at the open after Stagecoach talks have now ended. And also a further announcement is expected on the rights issue in November. Elsewhere, Deutsche Bank, they reported a Q3 net interest income of 3.13 billion, as expected 2.72. Provisions for credit losses though did increase And Ackerman said financial markets continue to normalise and they're well prepared for challenges and opportunities. BASF, though, did disappoint in the DAX. They've been an underperformer today. Q3 net at 237 against expected 413. So taking a look in terms of the UK and European bourses as we currently stand just through 10:30 in London, pretty much flat to mixed. And in terms of the calendar now and some other data points that we have seen from Germany, we've already had the unemployment rate come out slightly better than expected, 8.1% against a consensus of 8.3. Minor improvement as well, the highest since March of 2008 in terms of UK mortgage approvals. And then elsewhere we've seen also business climate indicating confidence numbers out of the Eurozone. But focus now turn to the initial jobless claims, the weekly numbers from the US. They're due at 12:30 London, 7:30 in Chicago. Much of the focus though is going to be geared towards the US GDP. We'll get the Q3 advanced figure. Analysts are predicting growth to return to the US economy at 3.2% against a prior contraction of -0.7. However, investors will be treating that with utmost caution given the severe surprise that we saw from the UK markets last week when they did show a contraction of -0.4 when they were expected to show growth for the quarter. Other than that, another busy day for corporate earnings in the US. We'll have Exxon Mobil, Procter & Gamble, two of the biggest stocks to report. And then for US auctions, we'll see the final one of the week in the 7-year notes, $31 billion worth. And also of note today, we'll see the final of the Fed's outright Treasury coupon purchases today targeting 2013 to April 2016 maturities.